So I had a question too. Aside from buying the property, a house, is it this easy to purchase a home as well?
Oh, okay. So let's describe this easy. What do you mean? What do you mean?
Oh, well,
You mean, can you go out with zero down
and buy a home?
Yeah, it's an easier process than what you're currently going through.
So this is doable because I'm at that spot as well.
Yeah, we can look at residential properties.
So I need to find a residential property I might can
Absolutely.
afford.
Yep.
Is it based off of what I can afford? Is it based off property value? I know there's some first time home buyer loans out there. I know there's a couple of things that, I'm just ready.
Okay.
I'm ready.
Perfect. Awesome. All right. Now let's talk about a couple of different areas. I'm just doing this. By the way, I had promised you DVDs.
You did?
Classes that you could watch.
And then you're supposed to be doing a class this month.
I am doing a class coming up within 30 days from this podcast. So
you changed the date again.
Well, I do private classes for people, groups, and then I do publics. So my public is going to be in March.
Okay, you moved it to March again.
Okay, and that's unlimited financing that'll be done.
Yeah, and I'm waiting for that class.
It's great because we go through all of these different areas, and that's really fun because we get to look at the ways to finance property and different situations and where to get the money, because you can go to a professional broker that does this, which you just got your letters from, your credit approval from. They're a professional company that loans money. They have their own money.
Oh, it is?
Yeah. They're ready to go.
Okay, I thought it was a private.
Well, it is private, but they're professional. So these people are in the business of loaning private money or their money to individuals without all the hassles and I'll just call them square boxes of conventional qualification.
Right. Do you make this amount of money, and how long you been on this job? And
Let's look at your credit, and because conventional loans, and what I mean by conventional loans are those loans that are made by institutions, banks, different lending mortgage companies. They make this loan to you, and they base that, but the loan that they lend to you is of higher loan to value. So on that $100 bill scale, they're going up. No, not lending you 60, but now it might be they're going to lend you 95%.
For a conventional loan.
Yeah. So they have to make sure that on your side of your bill paying and your income, that you have stability in that, because they can't rely on the property as much to repay them if you don't.
Okay.
They have to rely more on you and where your job is and where your income is.
And that's with a house, or that's...
Well, that's with a conventional loan against a house.
Against the house, okay.
Even if it's a conventional loan and they're doing commercial transaction, what they're doing is they're saying, okay, we'll loan you the money, but if we do so, and it's of a higher loan to value, okay? So we're going to loan you $95 against that $100 asset. Okay. You know that if you don't pay, they might get a $100 asset, but who knows exactly what the value of that $100 asset will be. And then they make a good loan if the value keeps going up.
Yeah.
But in 2008, it went down. The value dropped to below than what people owed on the property.
But also too, if you gave somebody $100, right, and you loaned them 60 on the 100, then your interest is only on 60. Right. So if you loan them 95 on the 100, then your interest is on the 95. So you're getting your payments back quicker based off.
Well, you've borrowed more, you pay more of a payment.
Exactly. So you're getting your 100, you're getting your value back faster than you would if you would have loaned them 40 or 60 bucks.
No, because at 40 or 60%, then their payment's lower as well.
Exactly.
They're all, it's like a horse race, but one horse has to start further back than another. And they're all going to pay off at the same time, same term.
Oh,
okay. But what you have is higher risk.
Yes.
We're talking about risk. If I have a $100 asset in front of here and I give it to you as collateral, right? You have to make sure that's really worth a $100 bill. How stable is the economy? How all of those things, versus if I have a $100 asset and you only loan me $50.
Okay.
So that's one, a private lender. And they even charge higher rates because they don't really care about your credit report and all of that because they know the house will pay it back.
That's the private lender.
That's private. Hard money, we call that.